Hello, everyone. We're here live. Today, our guest is from Toronto, Canada. He is a seasoned leader in the wealth management industry and currently the CEO of Cedargold, of which he's a research strategist of the Cedar portfolio, which invests based on the principles of the Austrian School of Economics and market environmentalism, helping society and the environment at the same time targeting outperforming returns. So, ladies and gentlemen, please welcome Richard Bonugli.
Great. Thank you very much for having me, and thanks for those kind words. Great to be here, Edson and Arthur.
Thank you, thank you. And I'm also here today with my co-host Arthur Falcão from Brasília, Brazil, who has a very strong background in finance and investments. He's a financial planner at Múltiplos Investimentos and also a student of Hayek Global MBA. So welcome, Arthur.
Thank you, Edson. It's a great pleasure to be here with you guys.
And today we're going to talk about applying Austrian economics to your investment strategy. And we're going to look forward for this conversation. And we'll be right after the countdown. We'll be back.
Ladies and gentlemen, may I have your attention, please? This is a global transmission. Hayek will be live in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Enjoy the show.
And now we're back. And to kick off, I have just a question for you, Richard. What do you do exactly, and what are you working on right now?
Sure. So we started our company back in 2010. It's a focus on wealth management services and risk management services. About 4 years ago, we launched a new initiative to use the principles of the Austrian School of Economics in creating an asset allocation portfolio, essentially what makes sense to invest in. And it's a focus on great businesses from around the world that are helping the environment and society at the same time as targeting outperforming portfolio returns. So we have a dual mandate. So basically, I'm in charge of this group. We have a global team and throughout the world in different continents. We do a lot of research on investments, on asset allocations. We also run a podcast program where we interview some of the best fund managers and economists from around the world. So we will do discussions on the financial markets, on the economy. We'll also talk to industry gurus. So that's been going for several years, like 5 or 6 years. And we have got a great traction on that. So it provides an awesome education if you're interested. We also are admired for that because we allow the guests to talk. So we generally do like 45 minutes, 1 hour, much longer than is on the financial media sites like Bloomberg or CNBC. So they really like to be on our program show.
Amazing. If you have that information, we can put the website here for people to check it out, and later we'll make it available in the post video.
Sure.
And what is it like for people out there who's watching us? What is the career like for an investment manager? Is it good money? Is it a safe career path? What would you say?
Yeah, I mean, a lot of times it's not a direct path, right? You sort of go through different phases in your career. So in my case, I actually started by the internet businesses. So I was one of the first users of the internet in the world back in 1983 in university, back at MIT, Massachusetts Institute of Technology. And so that's how I first came across the internet. And actually at that time, the reason I was using the internet was to do nuclear fusion research, which is, we can talk a bit about that later, but that's sort of the ultimate energy source, no carbon emissions, scalable, robust, low cost. So yeah, that was my research focus in that time in university. But then in the 1990s, I set up internet businesses, internet infrastructures in different countries around the world. So that was a lot of fun. Lots of travel internationally and meeting all kinds of people. It was really educational as well. And then from there, my migration from my career moved into more operational issues like with the internet and risk. That was initially operational risk, which led me into more financial risk as well. And so from that point, it was a lot of consulting work. I've done management consulting through KPMG, Ernst & Young, Capgemini. So that was part of my career in doing more of the management consulting area, which then led to more services on wealth management and risk management. And then that's when we launched our company back in 2010. So that's been going well. So yeah, and at this point, we have this focus, as mentioned, where it's not about always just making money, but it's helping society and the environment at the same time. So and we use Austrian School of Economics as our guiding post. The other mandate I want to mention is just from the podcast that we do, and overall is we're looking to provide a platform also from our perspective to help society and the environment, discussions on economics. We don't want to do mistakes in the past that there's been, to go to extreme socialism, for example, right? We don't want to go there. We want to preserve free market principles and try to get more of a level playing field for everybody in terms of jobs, opportunities, economic growth.
Okay.
Awesome.
So when you started the fund, you already had the idea, we are going to apply the Austrian School of Economics in here, or you started and then you found out of Austrian Economics and all that?
No, that's good question. It was sort of an approach that said, what we thought, what makes sense now. We also don't want to use debt or leverage, especially in this environment that is characterized by excessive debt, all the problems, especially in the indebted Western world today. So we wanted an approach that didn't have, debt involved or leverage is another area. So, and that filters down to the businesses in the portfolio as well, manageable debt and little or no leverage. But yeah, so we wanted to have an approach that made sense also for the long term, and what made sense in this environment, overcoming the challenges that are presented in this environment. We also wanted to serve as a platform, as I mentioned, to a larger meaning, a larger sense, helping society, and also with a focus in the millennial generation, what their challenges are for jobs, affordable housing, so how can we bring this about with economic thinking that makes sense? So we said, look at that. We asked ourselves, does it make sense to use this as an investment philosophy? So we did a lot of research on that for a year or two, and we compiled our results. We went to the Austrian Economics Conference in Vienna, Austria, that was held at the central bank there a few years ago. And we presented our paper there, which was well received, and discussed our research and how we were going to approach. So that's sort of how it all got started. And a lot of the people we interview have inputs. So we use also the podcast discussions as inputs into our investment process. A lot of them are Austrian school economists themselves, or fund managers that take a similar approach or somewhat similar, some type of theory or approach using the principles of the Austrian School of Economics.
And how did you initially learn about the Austrian School of Economics?
So here in Toronto, there's a firm, the Friedberg Mercantile Group, and there was a principal investment advisor that was part of that company about 8-10 years ago. We were living like in the same condominium downtown Toronto, and walking our dogs at the same time outside. So we just sort of met that way. And so I set up a relationship with him to help him on his investment advisory business. And so, we talked about, what's going on in the world today, what makes sense, who has the better perspective. So that was a long way, because the firm that he works for is Friedberg Mercantile Group. So I wasn't consulting to that firm, but rather to the individual person. His name is Andy Hayek. And so Andy and I started also a website at that time, cliffcool.com, where we posted 8 or 9 posts a day on different articles that made sense, and just put it out to the public. So we did that for like 5 or 6 years. The fund manager of the Friedberg Mercantile Group, his name is Dr. Albert Friedberg. He takes an approach also based on the Austrian School of Economics. He's actually originally from France, grew up in Chile, and they also have a branch down there in South America as well. So that was my influence, and also the people that we interview, like Dr. Mark Faber, Daniel Lacalle. He's an economist in Spain. So these are like they take the Austrian School of Economics approach, right, in their thinking. So strong influence from them, in learning from them when we're doing the podcast discussions.
Amazing.
And could you describe like 2 or 3 theories, Austrian School theories, you actually you think are important for us to consider when we are analyzing markets, or even in a specific company?
Sure. Yeah, that's a great question. The approach we take is sort of like a funnel approach. So we're looking at not only the metrics from a qualitative or a quantitative approach, but also a qualitative approach. So we have 7 factors that we've distilled from the principles of the Austrian School of Economics that are qualitative, and 7 that are quantitative. And the principles are more taken from what is emphasized, right, in the Austrian School of Economics. So savings and investment is a big thing, rather than borrowing and spending, right? More of the Keynesian School of Economics approach, based strongly on that. So savings and investment being a strong key, and also very high positive free cash flowing businesses. So we look at that type of metric, free cash flows. That's one of our big metrics. We also look at scarcity of value, whether it be in the business model itself, like in terms of commodity-based businesses would be of interest, but also it extends the scarcity value principle to outstanding number of shares, right? Because if you're always issuing more and more shares, you're diluting the value of each share, just like governments issue more and more currency, more and more money printing. You're diluting the value of the currency, right? Ultimately creating inflation, right, as a rise in the money supply. So, we take these type of characteristics into account. Also, innovation and technology. So where there's a strong, basically a burden to a scale to approach, right? How can businesses stay competitive? So we look at a strong emphasis on technology and innovation. And this principle extends into the market environmentalism concept, which comes from the principles of the Austrian School of Economics as well. What happened was the Austrian Economics Center and the American Conservation Coalition got together and they came up with 4 principles. And I think we can provide a link to those 4 principles also in this podcast. But it's an emphasis on technology and innovation as one of the principles. Other principles include like property rights, because if you own the land, you're more likely to take good care of it, versus if it's owned by the government, say. And also decentralized solutions. So there's an emphasis on that. Local solutions, decentralized. Those that are local to the problems have a better understanding of how to solve environmental issues than some centrally planned agency. Like think of the Soviet Union, how bad they treated the environment, with all kinds of radiation and dried riverbeds and lakes and all that. So not a good idea to do it centrally. So our approach is all on the principles, the themes, the values that are in the Austrian School of Economics altogether. And then we also incorporate economic thinking from the Austrian School, in terms of the business cycle and, quantity of money. We look for when things are displaced out of place, there's strong opportunities when extreme things happen. There's a lot of input from just qualitatively from an economic perspective as well.
Yeah. So, and you guys only trade North American stocks, or you also have international companies, derivatives, bonds, commodities, cryptocurrencies?
So it's only equities and only equities. So we do no shorting. There's no futures contracts. There's no options. There's no use of debt. No use of leverage. And so it's very straightforward and very traditional. We also do businesses from all over the world. They could be listed in different markets. We have a few in Brazil, Argentina, all over Japan, Singapore. We're in different places in Europe too, Germany, France, Norway, UK, Switzerland. So yeah, it's very very diverse, and it goes through a very strong qualification process, as mentioned, both qualitatively and quantitatively. So we have our analysts that are constantly looking for new additions to the portfolio, but also at the same time making sure the existing holdings make sense, right? Because they may not have, they might be doing things that we didn't expect or are no longer aligned with the qualification process that we have in place.
Can I ask a question, Richard? You, from what you're saying, I'm a layman here and I have little knowledge on financial markets in the details, but would you say that your approach is a fundamentalist approach? And if so, where does the Austrian economics go in there? Is there like a variation of the fundamentalist approach because of your input of the Austrian school, or is it different? Is it the same thing? What would you say?
Yeah, I would characterize it as like a value investing type of approach. Okay. And the where the value we're looking for is not so much a strict metric perspective, as I mentioned, because we input both qualitative factors and quantitative factors as well. So altogether 14 factors. But to the extent that what we have done is we've taken sort of a sequential process in identifying the principles of the Austrian School of Economics, some of which I just mentioned, and we've translated those to metrics that can be measured and observed in businesses. So, free cash flow, total shares outstanding, what percentage is owned by the workers of the business or the management of the business, a vested stake in the business. And earnings per share, is there some type of dividend payout? So we translate it to a number of metrics, and then we go further on that. So we then do a lot of research, what variation on the metrics makes sense, and what doesn't make sense. Sometimes it depends on the industry, and also we need to look what's going on behind the scenes as well. So like the total shares outstanding I mentioned, to ensure no share dilution, we like to see stable numbers of shares over several years, 3 to 5 years typically, either stable or going lower. But if it is going lower, we have to watch out, because that could be being done using more and more debt, right? Which is anathema to the Austrian School of Economics. So we make sure that if there is share buybacks, it's done with cash flow on hand, not debt, right? So they're not borrowing and buying their own shares back, but doing it because it makes sense, business wise, and also economics wise. So yeah, it's more of a value based approach. And for businesses that are really good, that tend to have been around for some time. So generally the startup companies don't fall within our category of what we look for. And also, if we see there's too much debt relative to shareholder equity or assets, right, that's taken off the list. We're not strict on all of the metrics, but we do have a sort of regimented process that we follow. And then at the same time, we're looking at the whole economics basis, right, of the company, how it's behaving and performing within the country that it does business in.
Okay. So you would say you have a more bottom-up approach, or you don't have this kind of analysis? Like, you worry first about how the business cycle, where we are at the business cycle, or you look first at how this company is gonna behave in the situation we are right now?
Yeah, it's actually a bit of both, because so like I was mentioning on the podcast discussions, we do a lot of discussions on the economy. So that sort of formulates our idea where things are going, economy wise. Central bank, what are they doing, policies, if there's anything we need to be aware of there, what's happening, a central bank monetary policy or fiscal policy by governments. We also looked at geopolitical risks, so all of this factors in from the top, and then from the bottom is the more metric based analysis, of companies. So it's not strictly only a funnel, like it's not a quantitative funnel, but rather it's a combination, of all of the above. So that keeps us flexible, because we recognize there could be times when it's not, the economy is not likely to go in the direction that we think, or that's beneficial for the companies. But the companies we pick are generally longer term, so we have little turnover. There is some, but generally not too high, because we consider them great businesses. And so it's a type of business that you want to own yourself. And recently we've also started a program where we're beginning to reach out to the companies as well. So it's a form of active ownership in addition to passive ownership. So the idea there is reaching out and offering suggestions for improvement from a consulting perspective. It could be free consulting or advisory advice that we provide, but it could also be some type of paid consulting project that, if it's a longer term, more involved, we have some of our team working on it type thing for a longer term. So it's more of a active approach as well as passive approach, which is unique and also provides better approach. The whole concept of ESG is relevant here. So more active ownership. A lot of people don't do that. We also look at the United Nations Sustainable Development Goals. There's 17 of them. So we like to see companies that are doing a lot of those. We don't do agenda-based environmentalism, so we don't go looking for companies that have these goals. But if they have them, and the more they have them, that's great. So we look at it from more that perspective. And we're also a signatory to the UN Principles for Responsible Investing. So we're not again taking the agenda-based approach from UN policies, but rather we're very unique in that mandate from the UN. So we provide some really interesting insight, like nobody does the way we do ESG and sustainability. We also have an emphasis on 3 areas of ESG and sustainability. So we look at ESG metrics. These are types of quantitative numbers that assess how businesses are doing for E, S, and G, environment, social, and governance factors. We also look at socially responsible investing. So we do some positive screening and some negative screening, like, we filter out businesses doing production of weapons or, that type of thing. So there's certain things we filter out, certain things we like to see that's more socially responsible investing. And we like to see the businesses doing impact investing. So what that means is they have projects or initiatives still financially accountable, and they're still looking for financial gain, but that do an impact. They have some type of impact in the industry they're in, or in something that is good from a sustainability perspective. And we also are looking at, like on the carbon emissions question, we look at A to Z, so the entire life cycle. This is also very unique because, a lot of people only look at once you have a solar panel, there's no pollution. Once you have an EV battery, there's no pollution. But is that really true? You have to look at the whole life cycle, the whole equation. How much pollution did it require to create that solar panel? All the mining and the milling operations is quite extensive. Same thing on the EV batteries, right? So, and then you ask yourself, is there sufficient metals for all of this to happen to only solar panels and wind turbine? The answer is no. It's going to be quite challenging given where we're at, but also the idea of the mining and milling of these creating lots of pollution. So, the answer is all of the above in terms of energy. What should we have as a mix of all of the above? But we look for businesses that are emphasizing solutions which make sense across all the life cycle, and also address the other side of the equation. So technology companies that can make more efficient use of diminishing resources or existing resources go farther. So that's the whole purpose of education and engineering is, how can you make a small amount of resource or diminishing resources go farther, right? So how can you make it more efficient, the energy, even though it's costing more efficient, so you use less of it, using technology and innovation. And also, above all, a positive ROI, positive return on investment. So to the, MBA-minded, management running a company, you would want to see positive ROI. So you're not doing sustainability or ESG, as an expense. So I actually created a service called Carbon Emissions Reduction Service that is a a process of business process optimization that actually will reduce expenses on the bottom line on the P&L statement because you're getting efficiencies of improvement, streamlining of operations, but at the same time you're lowering carbon emissions at the same time. So it's a positive ROI altogether, but you're also lowering carbon emissions at the same time. So we're strong believers on sustainability solutions that have positive ROI.
Right.
Great approach using
Yeah.
Austrian economics to think about profit as not something evil, but something that should be sought, and while also being environmentally responsible.
Sure. Do you want to
Go
ask
ahead,
me?
Arthur. Go ahead,
Okay.
Arthur. You have the floor.
All right. And so, Richard, based on those principles and those 17 UN no metrics, but those how can I say, orientations, instructions, can you invest in like gold mining companies, uranium mining companies? Like, is that part of your strategy? Like, I would like to know what are your opinions on gold and uranium, as you mentioned earlier.
Yeah, or even oil and gas companies, right? I think would
Yeah.
be this under the same question. Yeah, that's a great question. So, I mean, if you think about it, like, what is it that is needed to bring about like renewable energy? So there needs to be a lot of mining going on to meet. If you look at what should happen, or is planned to happen, or is being targeted to happen between now and 2030, between now and 2050, there's a lot of goals in that regard. Especially for renewable energy type of systems, you're going to need a lot of metals, a lot of type of. So what does that mean? I mean, you're going to have to get more cobalt, more zinc, more copper. So it's going to be necessary to do that. So I mean, to invest in mining companies that are targeting that would be part of the vision, right, of renewable energy to get to that point. It has to be, right? How else are you going to get there? So now the other side of the equation too is the mining activities. So there are ways of doing mining that are much more responsible. So emphasizing that as well. Actually, that firm that I mentioned earlier, Friedberg Mercantile Group, had investment in a Dundee sustainable company that based in Toronto, which would convert a lot of the pollution, like in the gold mining activities, into hard substances that won't dissolve in water. So they would display, here's the effluent. It's actually some arsenic, but I can put it in this water and still drink the water, and everything is fine. So there has to be that type of approach. I mean, the whole idea also is mining activities, making sure also there's alignment with the community, right? So we're big on that. There has to be an acknowledgement, right, for any risk mitigation. So strong on that. Nuclear energy has always been on my mind. As I mentioned, when I was back in university in the early 1980s, I actually did research on nuclear fusion. So that is sort of the opposite of nuclear fission, is sort of what we have today. There are some challenges with nuclear fission, but many of those have been addressed. And we have the advantage of little or no carbon emissions overall, right, on nuclear fission reactors. There's other types as well, more advanced reactors, thorium, different nuclear fuels. But that's certainly or should be a part of the strong, use now is nuclear fission energy, and then leading into nuclear fusion. So one aspect on oil and gas companies where there's a link with nuclear fusion is we actually have there's only a couple, like 3 or 4 companies in the world. We actually have 2 of them in our portfolio, oil and gas companies that own and invest in nuclear fusion, private companies. So there's nothing publicly listed yet, but they own these fusion energy development companies, and so that would encompass what they own as an asset. And once it's developed, they'll be reaping the profits from that, even being an integrated oil and gas company. And it's very important to think also of translating the legacy income and revenue, right, from these oil and gas companies into the renewable sector. So there was like Shell Oil in the Netherlands had an issue there where there was an activist investor in New York that was trying to break up the company into 2, one legacy, one renewable, but you can't do that, right? It's just you need to use the legacy revenue as a development into renewables, and where it's, again, positive ROI, where it makes sense. So one of the biggest areas we like, again, is fusion energy. So that's why we have those 2 oil and gas companies, right? And there needs to be a transition. The other thing, a transition planning. What's happening now in Europe is essentially no transition planning. So, you can't just eliminate fossil fuels overnight. Like, there's no ready, scalable, robust solution ready, right? And so now what do you have? You've got people going back to burning wood and coal.
Yeah.
And especially in Germany, it's lignite, which is even worse polluting than the coal from West Virginia. It's just it's very polluting. So that's what you need a transition plan, and that has to be also looked at from a sustainability ESG perspective on the fossil fuels, and then that leads into fusion energy. Let's say in the future, there has to be some transition planning, to get you to 2030 and 2050. So that's our view. Yeah.
Okay, that's nice. And do you have any position on nuclear energy companies? Actually, like you mentioned you have 2 that own some. You said fission, nuclear fission, right? Nuclear fission way of generating energy.
Mm-hmm.
But in nuclear energy, like, I know there are not many options, but like I know there are 2 or 3 ETFs you can buy. I guess it's uranium and chemical. Like, do you think nuclear energy is a part of the sustainability approach, or could be like the opposite of that?
So there's a few ways to do it. There are some companies that are have almost exclusive area of focus in some of the life cycles of nuclear fission. So those are interesting, and some of those cover a few of those life cycle areas. Currently, what we have is we actually have the commodity itself in the portfolio. So we have a position in the Sprott uranium fund, which is actually set up as a trust. So you're literally physically owning uranium. So this is actually so it's basically the fuel. You actually own the fuel. So it's a lower risk play than going into companies, especially smaller uranium mining companies. We think we are considering a few of the majors to add, but right now it's just limited to the actual fuel, uranium fuel itself. So we actually have a position on that. So it's basically like a trust holding gold or silver.
Okay. All right. And on gold, do you have any position on gold mining companies?
Yeah. So the way we're doing gold is somewhat similar to the uranium. We actually maintain a position of 5% gold and 5% silver, physical bullion that is held at the Canadian Mint in the form of the Sprott Trust. So the Sprott Trust, they're listed in New York and in Toronto. And again, it's physical metal, so much better than these. There are some aspects that have less risk than this whole GLD or those others where there could be some force majeure issues. And you might only be paid in cash instead of if the price were to rise on a weekend, if there was some reevaluation of the gold price. There's certain scenarios that would be that would not make sense, right? So we hold it more as the closest thing to holding physical as you can. So exchange traded, but in the form of a trust, and it's backed with real gold held at the Canadian Mint. So that's basically our approach for that. Well, we do have also a royalty gold company that is basically only getting the cash flow, which again we're big on for gold. So it doesn't have the issues associated with mining companies. The other thing is on the gold mining companies, many of them tend to do share dilution, right? They'll issue more shares, which dilutes the value of each share. So we don't like that. So yeah, there's other factors that we're not as interested in, especially the junior mining. It's not aligned with our qualification process.
Okay.
Let me change the question here. If someone wants to work with a company like the Cedar portfolio, or wants to join your team, what type of qualifications do you look for in a professional that wants to join your team?
Yes, yeah, great question. We actually have a program too with one of the nearby universities here in place, where we take on interns for like an internship program. So that's one way we get new people in, but also the type of characteristic that we look for. We like students that are eager to learn, that can learn by themselves, to take initiative in learning, because what happens is sometimes there's a part of the work where it's not quite well defined, but someone with some initiative can find a workaround or how to address that problem, right, in the course of the work process. So that's key. We like that a lot. And also open-minded, right, because a lot of the university students are taking economics from a Keynesian, School of Economics perspective. Some may have never heard of the Austrian School of Economics until they meet us. So that's interesting. But yeah, we and we're not like fundamentalists on only Austrian school, right? There's aspects of other schools that we look at as well, but the majority, right, is using Austrian School of Economics approach. So yeah, open-minded, we like to look at, and we also like more flexible arrangements, right, where people can work where they're living or if they're traveling. So we if they like to work within that type of arrangement, international as well. So we have related entity in Singapore there, and also we have advisors in different countries. So those present some different views, open-minded. We do podcasts. Actually, we've been recently doing a lot of podcasts even in Spanish. So we have a few coming up with some economists between Argentina. We're doing one next in a week or two here on Spain and Argentina, the economy. So yeah, people that are international minded, right? Because a lot of people will get confused, like especially like you got people in the U.S. They only look at the U.S. They don't see outside. So we like the people that are looking at international viewpoint, the macro view, risks. So yeah.
I love to hear the international part. If I wrote this down, if I can summarize it, you look people with initiative, open-mindedness, who are okay with working in a flexible environment, which I believe you do a lot of work from home, right? Remote working, and also international minded, who can understand and relate with different coaches. And I love the international part because that's what our MBA brings too.
Yes, the college. Yeah, exactly right. That's exactly right. So yeah, it's I mean, it's very important today because the world is very different. It's we think there's a lot of globalization still happening, although maybe in the indebted Western world, it looks like there's some issues there, or they believe the world is going in the other direction, but maybe it's only more so in those countries, right? So U.S., Canada, Western Europe, Australia, New Zealand, right? It's more happening there is less globalization, but in terms of overall, yeah, it's still on the rise, and so therefore you need to look at international capital flows not only for economics understanding, but also for investment environment as well.
Let me ask just another question, and I'll turn back to let Arthur do the final questions. But you mentioned podcast quite a couple of times, and you keep going back to your podcast. Do you see this as and we are also doing a podcast here, so it's our part of our marketing strategy. But how do you see the podcast nowadays as a tool to bring out ideas in marketing, and what is it that you like so much about podcasts?
Yeah, there's many aspects to it. I mean, normally I'll be in the host role, myself and our research strategist, Ira Harris. He's got over 40 years experience on floor as a floor trader. And he served as director for the Chicago Mercantile Exchange a couple times. So normally we do that. So that helps us in our research, in our research activities, in our trading activities, to understand, by talking to some of the best fund managers, economists from around the world, we're directly part of that discussion. And it's generally 45 minutes, an hour. So we get the sort of distilled version from extensive research that they might be doing. And also at the end, we ask, generally, asset classes, which asset classes do you like, or where do you see the trends going in the dollar, or there's all kinds of questions. So it's cross asset, not only equities, but we want to understand the relationship between bonds, commodities, currencies, and equities. Those four asset classes, because there's relationships between them and they affect each other. So that goes into our technical analysis as well, into our research. There's also the awareness, right, of us in the podcast. We're not directly advertising the portfolio and the index that we have. So it's more of an indirect, in that sense. So we identify, who we are, but so there's that aspect that can help a bit on marketing. And it's also an educational platform, like I said. So for everybody to understand the economy today, why is it like it is today? What are the challenges? I mean, it also helps you identify, where are the jobs, where are the opportunities, and what should we be doing? Maybe what in terms of economic thinking or putting forth new ideas. So there's all kinds of benefits, features to it from that perspective. And so we have it as it's a separate, like, business unit, but there's not any revenue we make from that. So it's more like a public service, to the larger community. And we do advertise a few retirement facilities that are mostly in Asia that might help out people. So we have some reference to that. There's 6 of them, where somebody could retire very, very low monthly type of thing. So, but yeah, so it does a lot of purpose, different ideas. So we bounce different ideas. What do you think of this? Do you think this could happen? And especially people that have a big research team, like we've done with Louis Vincent Gave of Gave Call. He was actually recently doing a podcast in Brazil as well. So he's based out of Hong Kong. His firm spends most of his time in near Vancouver in Canada. He owns a soccer team in France, so sometimes he goes there. But yeah, he's one of the great people we admire. Dr. Mark Faber as well. He's based in Chiang Mai, a Swiss economist, Chiang Mai, Thailand. He's based there. He has a firm. His firm is in Hong Kong. So the people we like to talk and interview, do podcast discussions, we like, especially when they have economic history background. So because then they take more of the international perspective. Oh, this happened in World War II or something, or back 200 or 300 years ago. Or every history, this has gone on for millennia. So yeah, it's that. And also we've done a few podcasts like on art and architecture. So we had some people. I have some villas and like palaces from 1,000 years ago in Europe and stuff like that. So that was very interesting, because to understand the challenges of like art, as an asset class, and how that behaves in times of like government expropriation and times like that. So a large part of our theme on the podcast is financial repression. So because it could take several forms. Maybe the intentions are well-meaning, like by central banks, but it could have adverse consequences, right, to the economy and to investors and to workers. So we look at those issues because it could be interest rates are repressed financially, or there's higher inflation to wither away the purchasing power of the currency, right, as a tool of financial repression. So a large part of the theme is that, looking at what's happening to protect from those risks and those trends.
Very cool.
All right. Well, I guess I have 2 more questions, Richard. The first one, there are some characters in financial markets that we know that use Austrian economics as a tool for investments, such as yourself, Peter Schiff, the guys at Incrementum that wrote the book Austrian School for Investors, and Mark Spitznagel. I'd like to know if you keep contact with them, if you change information. Like, is there any kind of contact between you guys?
Some, and we've had some of them on our program podcast show as well. So that makes for very interesting discussions. Some not really interested in coming on to a public forum, and some only have maybe a restriction to certain types of forum. Like we did a podcast with Zoltan Pozar of Credit Suisse, So that was big. I think we had like 85,000 views on that one, but I think they were moving to more of a smaller set of people that they do podcasts with, which is fine. So we just we reach out to as many as we can, because we like to get that Austrian School of Economics perspective. And so we ask, would you like to be on our show, discuss what we admire your thoughts and views highly, and it'd be great to have you on our show. But we don't just restrict ourselves only to Austrian School economists, right? We try to get different perspectives from different people as well. So yeah, it depends, but yeah, we'll do. We stay in touch. Some are. We have a big trading room as well, where people doing short-term trading. So some are in there on a daily basis. So we talk to people there, like literally daily during the financial markets.
I see. That's great. And the other question is, what is your daily routine, and like your routine of studies, of working, or how you deal with your employees? Do you still? I believe you still study Austrian economics a lot. Like, I don't know what are you reading right now?
Yeah, I mean, it's like, what do I like? Well, the first I begin my day, actually go just outside here in the countryside and do. I have an exercise routine, like 150 push-ups, 200 squats, 200 jumping jacks, 51 burpees. That's my my routine, and sometimes do a little bit of running. So, to try to get a clear mind and get everything moving again. But a large part of the day is very diverse. So it's not always the same day. Sometimes meetings downtown. And it's also, there's some consulting work. So we have consulting projects that could be to different firms, maybe banks, wealth management firms, and so, or risk management type of projects. So we do that. That might entail meetings. Some are face-to-face, some are online, using Zoom or Teams or, Google Meet or whatever the case may be. There's different types of activities. Working with our team, it could be like a team meeting, directing projects. And we use everything for communication from, internet to even WhatsApp on what should be the next step on our project. I've got meetings in the day, but also at night. So like Monday night, have meeting with Asia, Singapore. So that's nighttime for me. And then sometimes attending, events, right? It could be conferences or events. So it's quite diverse, which makes it interesting, right? You're not always sitting down all day, or not always standing up, And so it's really makes for, and also interesting, interesting people. We do the podcast. And so it's always meeting interesting people like yourself also. So we're really happy for that.
It's amazing how podcasting is an opportunity to also meet people in addition to creating content. Right?
Yeah.
This is very good. So Richard, just to close off, tell us a little bit, share your screen and tell us a little bit more about the Cedar portfolio and the work you guys do.
Oh, yeah, sure. So if I can share my screen here, it'll take a minute here. But so we have set up a dedicated site, website.
Sorry.
And it should be coming up here shortly. It's a website. The URL is cedarportfolio.com. And so this talks about our portfolio. It also gives a link to the index. So it's index is basically the weightings that we have set up to make an index that is monitored by a company in Germany called Beta Data, BITA. So every day, every night, they calculate, what the positives and negatives were on each holding, and so they'll graph, so that way we got actual performance results, right, to show. But there's a lot of resources on our website. There's a little video we made. There's a link to market environmentalism, which is those 4 principles I mentioned. There's a link to portfolio presentation. There's also, if you look around here, there's our team is also listed. If you hit on about on that page, there's sort of our management team from different parts of the world, and so yeah, that's on the about. There's also a little bit on our investing approach. So this has some links to I think the 2 books that you referenced, Arthur, on one book by Incrementum, one book by Mark Spitznagel on that talk about different approaches to using Austrian School of Economics for investing. There's also some links here to there's linked to PRI, to the UN, and so also some videos, the Mises Institute. We also do a lot of podcast discussions with people from the Mises Institute, different Mises Institute from different countries around the world. And there's a book you can actually download here, How Market Environmentalism Can Protect Nature and Save the World. So this was done by the British Conservation Coalition with some other organizations as well. It's a great book. It's like a couple hundred pages. So yeah, you can download that and read that. So yeah, lots of resources. We have also, there's a trading service if anybody's interested with our research strategist, Ira, can get you a trial service if anybody's interested on that.
Great. There's a lot of stuff to go through and some educational material. It's very, very, very interesting. We'll also link your website to the description.
And how can someone invest in your... I'm sorry, Edson.
Go ahead, Arthur. That's a good question.
How can someone invest in your funds? Like, it's actually one fund, right? Or you have more than one?
Okay, so the way we are set up is we're doing the portfolio asset allocation research, and we've got the index set up, as I mentioned. We prefer our relationship to be as a sub-advisor to people that want to, set up a separately managed account, or so that they handle more of the direct client relationships and the funds and all that. So, and so we're more in that role, in terms of research, consulting, asset allocation type of services. The products that we're involved with is a traditional type of fund setting up in Europe through another company, and then we actually have some we have initiatives also in Singapore, but even in South America. So because there's a lot happening with some of the banks there, BTG Pactual, Banco Bradesco, I think, is doing some with digital security tokens. Argentina as well. So there's actually we have a strong interest in actually setting up the portfolio as a digital security token issued in Brazil and maybe cross-listed with the New York, in other jurisdictions, but initially set up in Brazil. So that's one initiative we're pursuing at this time.
Amazing. So for the Brazilians out there, if anyone's watching us, there's an opportunity for an international portfolio to come into Brazil and give us some good different products. So let's close out we had a great conversation. We're over 1 hour here already. Just it was an honor having you with us, Richard, and also thank you, Artur, for being my co-host today. Would you guys have any closing remarks?
Arthur, you want?
Well, I just want to
Yeah.
thank you, Edson, for the opportunity of being here, and Richard for the amazing insights you brought today. Like, it was really fruitful, and I enjoyed it a lot. And well, thank you.
Yes, thank you likewise so much for having me on your program show. Very happy to do this. And yeah, just words of wisdom to as you mentioned, Edson, for keep everything international minded, international focus, and the prospects for growth, economic activity, and heading in the right direction is being a lot led by your firm for Brazil and South America, the whole Latin America region.
Awesome. Thank you. And thank you everyone who watched this, and we'll see you next time.
Thank you.
Bye-bye.
Take care. Yeah. Bye-bye.